Good morning. Happy lunchtime. Welcome, everyone who's joining. We've got a growing group. Feel free to open the chat and say hi. Where are you calling from? What's something positive that happened for you today so far? I'm in San Francisco, and there was a beautiful misty rain this morning on my commute to the office, and it was refreshing. I'm very thankful for that start to the day. Welcome. We've got folks in Oregon, Miami, Texas. Hi, Patrice from Maryland. Welcome, welcome. Ravon from Minnesota. Welcome, everybody. It is a great Wednesday to talk about taxes. Has anybody ever said that before? Good morning, everybody. Good early afternoon. Excited to take some time and talk about something we probably prefer not to talk about, but hopefully this will be informative. There is time reserved for a live Q&A. So someone just asked if there will be a recording. Yes, Jamar, there will be. We post all of these sessions to our YouTube channel, and then if you attended, we will also email you a replay. Casey's saying, I actually wish I had more people to talk about taxes with. Okay, well, I expect some commentary and some questions from you, Casey. Welcome, welcome. So this session, it's really going to be focused on self-employment, solopreneurs. That's who Collective is built to support. There are no bad questions here. If I don't know the answer, I will just tell you and we'll do our best to find the right answer. But today we're focusing on late S Corp elections. What does it mean? Welcome from New York, Joe. We're going to dive in. So this session, it's shorter. We're doing a 30-minute format where we start out with 10 minutes of a presentation style. While you do that, feel free to pull up the Q&A feature within Zoom and brain dump any questions that come up. And then the rest of the session will be live Q&A. So no bad questions. Feel free to put them in as we're going through the presentation. And Courtney, I will talk more about Collective. I can actually do that right now. Who is Collective? If you're new here, Collective is a all-in-one platform to support solopreneurs specifically. Even further, those who want to elect the S Corp tax status. And so the idea behind Collective is that if an S Corp is the right solution for your situation, we can bundle together everything you need to get it set up and then stay compliant. So that can start with LLC formation. If needed, we'll file the S Corp election paperwork for you. And then we pivot over to everything that's required to operate the S Corp. So monthly bookkeeping, you have a need to pay yourself a reasonable salary. So we set you up on payroll via Gusto. And then we prepare and file that business tax return that would be due. So it's one login, one subscription to bundle all of those services together. And again, we are specific to solopreneurs. So if you're someone with, a slightly larger business, Collective may not be the right solution for you, but even still, these webinars are open forum. So if you've got questions, it's a great place to get some questions answered. And with that, we're going to dive in. What are we talking about today? We are going to do a quick refresher on how an S Corp election works, what it does to your tax profile, potentially lowering how much you pay in self-employment tax. We're going to go over what the late relief process is for filing an S Corp election after the timely deadlines and what that process looks like, who is eligible to make a late relief election, and how to file it. And then we'll pivot over to live Q&A. I see some great questions in the chat. Please, if you haven't done so already, move them to the Q&A. It's just easier to manage there so that we don't miss any questions. I'm going to leave this up for a quick moment. This webinar is for educational purposes only. Nothing contained in this presentation should be construed as legal or tax advice. Always consider consulting a professional if you need legal or tax advice in operating your freelance business. All right, so we're going to dive in how an S Corp election can lower your tax bill. So if you are here, you might have done some research on S Corp already. Maybe you've heard about the self-employment tax savings potential. We're just going to do a quick walkthrough on how that actually works. So let's lay a foundation. Maybe you're a freelancer set up as a sole proprietor, so no legal structure has been formed, or maybe you have a single member LLC. Let's talk about that tax profile real quick. When you're structured in that way, either sole proprietor or single owned LLC, your business activity gets lumped into your personal tax return that you file every April. So you'll follow the instructions for Schedule C, you'll record your income and deductions. What's left over is business profit. Profit is a big number to focus on because that's ultimately what you're taxed on. And so what happens to your tax bill? When you've got business profit, the first bucket of tax that we all pay, it's inevitable, is income tax. If you've got taxable income in the United States, you will pay income tax. It's determined based on your filing status. So, married filing joint, head of household, single. And then it's based on your total household income. So, if your partner works, or maybe you have a rental property or a lot of investments and capital gains, you want to factor in all of those income sources for your household to ultimately determine your income tax rate. And so that's one bucket of tax that exists by default with the IRS and potentially your state. If you live in a state that has state level income tax, most of us do, there will be both the federal and state level income tax component. And then separately, this is what's unique to this group. When you're self employed, your business profit is subject to self employment tax. It's made up of two different types of taxes, Medicare, which is 2.9%, and then the bulk of it is Social Security tax, 12.4%. And combined, you get this hefty 15.3% self-employment tax assessed on your business profit on top of your regular income tax obligation. So what's happening for a lot of us who are self-employed under this, Schedule C reporting structure is you're paying multiple layers of tax on the entirety of your income. And so real quick example, what does the S Corp let you do? The short version is when you add an S Corp election, it may give you an opportunity to control and reduce how much you pay in the self-employment tax. And so here we've got an example. On the left, this person is set up as a sole proprietor or single member LLC, and they've got business profit of $160,000. So what does profit mean? Real quick descriptor on this. Revenue is what you bill your clients. That's straight up money in. Expenses, write-offs, deductions, those are all subtracted from your revenue to get you to business profit. And so again, profit is what we're focused on because that's ultimately what you pay tax on. So in this instance, we've got the same person making the same business profit, but in either two tax statuses. Here on the left, this person's got business profit of 160, which means as a Schedule C reporter, they'll pay the entire 15% self-employment tax on that entire 160 of profit. So that's generating nearly $25,000 in self-employment tax. If that same business, let's assume it's a single member LLC, decides to elect S Corp status, you got that same business profit, but in the S Corp, you are required to pay yourself what's called a reasonable salary. And then this reasonable salary is the portion that you pay self-employment tax on instead of your entire profit. So here on the right, the same 160 of profit, but now we're splitting it between 60,000 of a wage and the remaining 100,000 is left over to be taken as an owner distribution. So what happens to self-employment tax in this instance? Now, instead of the 160 being subject to self-employment tax, it's only that 60,000 reasonable salary, which results in a reduction of self-employment tax in about 15,000. So that's the opportunity. That's why people are researching S Corps. Via the requirement to pay yourself a reasonable salary, you may be able to capture some self-employment tax savings. And I do see a couple questions still in the chat. If you can move them over to the Q&A just so we don't miss them, that would be great. Okay, so we're going to talk about what is a late S Corp election and the IRS late relief process. So what is a late election? You might hear it be called a retroactive S Corp election. What it's talking about is making the S Corp election effective at a date that's already passed, even beyond the IRS's timely election window. So we're going to talk about what timely versus late means, but a late S Corp election, sometimes referred to as retroactive S Corp election. Sometimes you might hear the word backdating. What it does is it allows an eligible business to elect S Corp status for a date that's already passed. People who opt for this or have missed it via reasonable cause, what does it allow? Potentially, it can unlock some self-employment tax savings. But there is, an asterisk on that. There's a lot of catch-up compliance that would need to be done that goes with it. So timely elections versus late relief. So the IRS allows taxpayers to elect this specific tax status. So it is very proactive on the taxpayer to choose to be taxed as an S Corp. And with that, the IRS imposes, deadlines and benchmarks to make these elections. To make a timely S Corp election, the election needs to be made within 2.5 months of the desired effective date. And so if you've done some research, maybe you're saying, maybe you've Googled, when do I need to file the S Corp election? You'll probably see this March 15th or March 16th deadline. That's the 2.5-month window from a January 1 desired effective date. Anything beyond 2.5 months would follow the late relief process. So timely elections for an eligible entity, in this case, we're talking about LLCs, you file the regular S Corp election form 2553, but there's a separate section to fill it out for late relief. If you're filing timely, it needs to be done within 2.5 months of the desired effective date. Filing timely means a less complicated election process, probably less catch-up compliance that needs to be completed. However, in many instances, you missed the election. Maybe you didn't know, maybe you were misinformed by a CPA. The IRS has this late relief process that allows you to still elect with a couple additional requirements on the S Corp election form. Now, here's the meat. It is available, which means there is opportunity to potentially reduce your self-employment tax. So the pros, it's an opportunity to correct an oversight. Maybe you're misinformed. Maybe your CPA kind of ghosted you during tax season. There's a lot of reasons that this can be missed. The potential to reduce self-employment tax is present if you intended to be an S Corp. And then with an S Corp compliance, you need to generate, financial statements, profit and loss, balance sheet, ultimately to populate a business tax return. And so in that filing, you're creating a clearer financial story. Maybe you've got a history, you've got financial statements, you've got business tax returns that can help you for future planning. So those are the pros for pursuing late relief. The cons can be hefty, and it really depends on your circumstance, depends on how far back you want to go or you're eligible to go. So the cons: increased compliance and complexity. So by default, switching to S Corp triggers a lot of compliance work that's not necessarily required when you're structured as a sole proprietor or single member LLC. When you elect S Corp status, it triggers the need for more comprehensive bookkeeping. So you now need, profit and loss and balance sheet. It triggers a need to file a separate business tax return. So maybe it's, DIYing or paying a CPA to file that business tax return. And then you have this big need to pay yourself a reasonable salary. And with that comes a lot of payroll compliance. There's payroll tax returns. There's applying for a separate payroll employer registration. And so depending on how far back you want to go, it can trigger a lot of time-consuming catch-up compliance, and it can be expensive. Another big thing that we don't often hit on is when you go back further, you may have to correct or amend tax returns that you already filed. to accommodate for this K-1 that should have otherwise been included in your return. There are also payroll tax returns involved that you may have to file or catch up on. So, it sounds great. Maybe there's a tax savings opportunity. A couple $1,000s doesn't sound like nothing, but what might it cost you to get that catch-up compliance in place? And I'm just going to take a quick look at the chat. There's a couple questions in there. If you don't mind putting them in the Q&A just so we don't miss them, we'll pivot over to Q&A shortly after this next batch of slides. So who is eligible and how to make a late S Corp election? So the IRS, if you want to do your own research, if you look at Form 2553, it's the S Corp election form. There's always instructions to the actual form. It's going to detail out who's actually eligible, what constitutes reasonable cause. Reasonable cause, it's relatively vague, like a lot of the IRS guidance in some instances. You intended to be taxed as an S Corp, but you simply missed the paperwork. Maybe there was a valid reason for filing late, like you relied on an accountant that's no longer, responding. It was poor tax advice. Your business should otherwise be eligible or qualified to elect S Corp status. So there are certain thresholds, like you need to have less than 100 shareholders, one class of stock, eligible entity, certain types of trusts can't be owners of S Corps. Your citizenship or resident status can come into play with who can be an S Corp owner. And then you're within the grace period for late relief. So it's 3 years and some change, I think 3 years and 75 days that you can go back at following late relief. And so what does it mean to actually request late relief with the IRS? It's actually a very simple 2-page form. You fill out the S Corp election paperwork just like normal, but you fill out another section at the bottom that's stating your reasonable cause. Filing the paperwork itself is easy. Any of us can do it. It's simple. Watch a YouTube tutorial, read the instructions. What is complicated is the catch-up compliance that goes after that. And so, depending on, going back 3 years or to the start of this particular tax year, in either instance, there are catch-up compliance work that needs to be done. This could be rebuilding your books. If you haven't kept financial statements, you need, profit loss and balance sheet, because that gets reported on a business tax return that will be due in the future. The big one is your reasonable salary. So the way that you save in an S Corp is by taking this reasonable salary. That's how the self-employment tax can potentially be reduced. The means to do that is through running a payroll for a reasonable salary. And so failing to meet that criteria when you elect S Corp status can be incredibly risky. So having a payroll plan in place to do catch-up payroll is huge. Depending on how far back you have to go, you may have to file S Corp tax returns that were already due, or you just make a plan to file the first S Corp tax return if you're filing for this particular year. That was it for our short presentation. We're going to pause for a quick poll. We actually have 2. There's one quick one now, and then one when you close the session. We appreciate any feedback. It's how we get better. It's how we do better at these webinars, how we can be more focused on what's actually helpful. So we're going to leave this up for just a quick second. I see 28 questions in the Q&A, by the way. We typically go over in these sessions. So if you have time to hang on, we'll get through as many as we possibly can. But the recording will be posted on YouTube if you've got a hop. And we're going to give it another second for the poll. And then we'll switch over. So before we dive in, jot down this code fall50, fall in all caps. It's 1 month at 50% off. And if you feel inclined to speak with somebody on our team to see if Collective and S Corp is a good fit for your business, you can scan this QR code. It'll take you to our qualification form where you can schedule a call. The link is also in the chat. Thank you, Sarah. And we're going to stop screen share and pivot over to Q&A. All right, so we're going to dive in. 33 questions. This list usually grows as we get through, so we're going to do our best to answer as many as possible. And thank you. Sometimes it's crickets in here, so greatly appreciate the participation. Andrew is asking, I'm a newbie. I would like to know what is the timeline to elect S Corp after LLC registration? I like to understand the timeline and grace period. Okay, so the S Corp election can only happen when you have an eligible legal entity in place. So in this instance, it can be an LLC. The S Corp election, for it to be considered timely, needs to be made within 2.5 months of the desired effective date. So if your LLC was formed in 2024 and you wanted a January 1, 2025 S Corp effective date, you would have to file the S Corp election by March 15th. That's 2.5 months from that January 1 effective date. In the instance that you form an LLC mid-year or any eligible entity mid-year, let's say it's today, September 24th, you would have 2.5 months from today, the desired effective date, to timely make the S Corp election. If you made the election after the 2.5 month window, you would be following under the late relief process. Claude is asking, will this session be available afterwards? Yes, it will be emailed to you, but they're also posted on YouTube. Anonymous attendee is asking, does Collective advise on things like solo 401k, other deductions to see if the profit will, let's see, I'm sorry. Does Collective advise on things like solo 401k or other deductions to see if profit will be at a threshold for S Corp to make sense? I think that's what this question is asking. So really what we're trying to understand when you take a call with Collective is, what is your tax profile? Generally, the best advice anybody can give you is, one, be aware of what's deductible for your business, and then claim all the deductions you possibly can. Because ultimately, what you want to do is lower your taxable profit. So what's happening on these calls with Collective is we're trying to understand, where is your profit landing now? And in this instance, what are your growth goals? How long will you be self-employed? And those are the factors we're using to determine, is an S Corp a good option for you to consider? In terms of advice, we like to present what are other solopreneurs using to optimize. Solo 401ks are advantageous because they, allow for both employee and employer contributions, which can then reduce your taxable profit. So, we'll provide information on what is available and what's within the tax code and your industry to deduct to optimize your tax structure. Austin's asking, can you take owner distributions multiple times a year or only at specific times? This is a great question about how distributions work. So out of an S Corp, the way you pay yourself is kind of in two buckets. One is this reasonable salary. It's on a payroll cadence, perhaps. It's kind of just happening in the background. The rest of your compensation is available through owner distribution, which you as the owner can control the amount or the timing, the cadence, if any. So it does not have to be at one particular time. It doesn't have to be at the same time every month. It can be as needed in any amount. The asterisk we put on this in the simplest terms is not to drain your business bank account via distribution. You need to make sure there's a cushion to keep normal operating expenses running through that business bank account. But you can take distributions multiple times throughout the year at any time in any amount. Is there a certain business revenue? So this is a question about, is there a certain revenue threshold for S Corp to make sense? No, the IRS does not impose any limitation, high or low, on how much money, revenue, or profit you need to make to be an S Corp. What the perspective most people take is, where is there a savings opportunity, or when? What are my growth goals? What's the lifetime of me being self-employed? Because an S Corp triggers, an annual business tax return, you want to understand if what you're doing and your goals align with, following annual compliance. So no, the IRS does not have a dollar amount threshold. You can have a loss. You can make, $10 million out of an S Corp. It doesn't matter. Really, a lot of people are looking at when will the cost of compliance be less than my savings potential. Lloyd is asking, what about a multi-member LLC, so multiple owners? So collective is built specifically for single-owned S Corps. That's just our scope. That's who we serve. In general, an S Corp can have up to 100 shareholders. So if you're somebody who's formed a multi-member LLC, it defaults to partnership tax status. You can add the S Corp election and be taxed as an S Corp with a multi-member LLC, assuming all the members are considered eligible entities. Casey's asking, are distributions typically done at year end? We did touch on this in the last couple questions. They can be done at any time. A lot of people wait for year end. You can do them monthly on any particular, cadence if you choose in any amount, but it does not have to be at year end. Kristen's asking, when calculating the self-employment tax for non-S Corps, so a sole proprietorship or single member LLC, does that tax apply to total wages or net wages after expenses? So self-employment tax, if you're a sole proprietor or an single member LLC, you don't pay yourself a wage. The way you pay yourself is an owner distribution, where you just take money out of the business and put it in your personal bank account. Under that tax structure, you do not get a deduction for that amount you pay yourself. Even though it's paying yourself, it's not deductible. It's considered a distribution. So the self-employment tax is assessed on your business profit. So what you bill minus all the normal, general and administrative costs. Your salary, what you pay yourself out of a sole proprietorship or single member LLC, is not a deduction. Robert is asking a question about QBI, Qualified Business Income Deduction. Robert, I'm going to level with you. I've got to do some refresher on QBI, but it's a great question and something that should be factored into your decision for electing S Corp. Let me get back to you on that question. Claude is asking, can this be done years later, but still in the first 2.5 months of the year? So it really depends on what your desired effective date is. If your desired effective date is within that 3 years, 75-day grace period that the IRS allows, you're still following late relief because your desired effective date is still more than 2.5 months away, if that makes sense. So you would not do a timely election if you're filing with an effective date that's more than 2.5 months past. But late relief, a lot of taxpayers do it. It's an option. But if years have passed, you're well beyond that 2.5 months after the desired effective date. A lot of questions on multi-member LLCs today. So Meredith is asking, if you are a 2-person LLC, is it still effective? So assuming both owners of the LLC are considered eligible, resident status is compliant, they're both individuals, not certain types of trusts, then yes, a multi-member LLC can elect S Corp status. And it can follow late relief if needed. Lloyd is asking, if the LLC did not begin until August 28th, is that when the 2.5 months begins? Yes. So an S Corp election can only be layered on top of a legal entity. So a legal entity like an LLC needs to exist first. So if that LLC was approved on August 28th, you'd have 2.5 months from that date for your S Corp election to be considered timely. Michelle's asking, how much is the required revenue to qualify for an S Corp? So there is no revenue or profit threshold with the IRS. You may see, like with collective, 60,000 of profit is the point to have the conversation. That lens is for people looking for a net savings opportunity. So when will my S Corp provide more savings than it costs to do all the extra administrative work? So there's no rule with the IRS for how much you earn. It's more about, where do the savings exist net of my costs? We are at time and the list of questions has grown to 50. So we're going to hang on for about 10 more minutes. If you've got the time to hang on, feel free. We'll keep recording and this will be posted to YouTube. Debbie's asking, does all of this apply to partnership LLC? So yes, again, if your LLC with multiple members are all considered eligible owners, then it can elect S Corp status and it can follow late relief. I'm retired. So Gustav is asking, I'm retired, but work 1 week every month. I will gross approximately 40,000 this year. Does it make sense for me to switch from LLC to S Corp? This is my first year. It depends on, the nature of your work. How are you growing your business? Is it something you'll continue for more than 2 years, right? So we have to factor in, is it worth it for me to pursue this annual filing requirement that comes with a lot more costs? You'll need bookkeeping, you'll need payroll. Are you looking to grow? Is it going to stay at 40,000 of gross? Typically with if you're grossing 40K and you back out your expenses, your profit's probably going to be on the lower end, which means you may pay a lot more for tax filing, bookkeeping, payroll than any savings advantage. Let's see. Could you tell us a tiny bit more about the collective for those of me who are new? So Courtney's asking, what does collective do? We're an all-in-one platform for solopreneurs who want to elect S Corp status. And so we will bundle together everything from LLC formation to filing the S Corp election for you. And then we include everything you need to maintain that S Corp. So monthly bookkeeping, we do payroll via Gusto. It's all embedded in your collective dashboard, and we handle the employer registrations. And then we prepare and file your business tax return. Behind the scenes with Collective, you've got a community, so you can connect with other solopreneurs. And then you've got a team of self-employed experts. So if you've got questions about, what's deductible, how does the tax code apply to, this meal I took my client out to, you've got a support system in the background. Patrice is asking a critical question. What is the best way for an S Corp owner to know what a reasonable salary should be? This is a great question. It comes up all the time. Reasonable salary is such a touchy subject because the IRS is very vague in its guidance. The tax code literally says it needs to be considered reasonable. There are some general rules of thumb out there. If you've done some research on reasonable salary, you might have come across something called the 60-40 rule, which is not an IRS rule. It's not a vetted framework or formula, but it is a general rule of thumb that states 60% of your business profit is allocated to the reasonable salary and 40% is allocated to a distribution. So it could be a great starting point to determine your salary. What's better is perhaps a comparable salary. Consider where you live. What region? Are you in the suburbs or are you in a city? Are you working 20 hours a week or 40 hours a week? Is it full-time or part-time? What's your seniority in this particular role? And so factoring in all of those pieces can help you determine a comparable salary, and that can be used for a great benchmark for your reasonable salary. When you're employed elsewhere, you get salary adjustments every year. And so there's a lot of flexibility and control in your salary. You can, determine your own payroll cadence. You can skip a payroll if a contract falls through. You can run an off-cycle payroll if needed. So there's a lot of flexibility in how you get there, but ultimately you're aiming for an annual target. Anna's asking, if I just formed an LLC this summer, can you file an S Corp for next year? Yes, you can proactively opt for an S Corp election for a future date. Um, the IRS does take some time to send out those confirmation letters. So if you were planning to do that, you could do it now and just have a plan in place to start, your bookkeeping, payroll, identify a tax preparer for that period that will start in 2026. Martha, this is a great question. As a requirement for S Corp filing status, does a reasonable salary necessarily mean becoming a W-2 employee, or can we 1099 ourselves? So this is a great question. It has to be on W-2 salary, and this is why. When you run formal payroll for yourself, and it's, some people can do it manually. It's a big pain to fill out payroll tax returns by hand. So highly recommend a payroll software. But paying yourself through payroll, you automatically remit Social Security and Medicare tax. So if you're an employee elsewhere now and you were to look at a pay stub, you'll see, your regular income tax withholdings, federal and state. That's how you're paying into your tax bill throughout the year. But you'll also see withholdings for Social Security and Medicare. And if you 1099 yourself out of an S Corp, there's no means to pay into that system. And that's the whole point of S Corp, is finding a way to pay into Social Security and Medicare on a portion of your income instead of all of it. So the W-2 and the formal payroll is kind of the vessel to pay into those tax systems, Social Security and Medicare, which ultimately results in the tax savings potential. So under the S Corp, it would technically be out of compliance to pay yourself a reasonable salary via 1099 because you're not paying into the Social Security and Medicare systems. Let's see, someone's asking about the payment options for collective. Everything's on our website, but we're a month-to-month service. $349 a month. We've got a one-time onboarding fee, $199. Otherwise, $349 a month. It includes everything I talked about. If you need us to set up an LLC for you, you would just pay your state's LLC formation fee. We don't, fluff it up. It's just at cost. We pay it on your behalf, and then $349 a month. Andrew's asking, I received a note from the IRS stating my S Corp was approved, but starts next year due to late filing. Can I still use first year bonus depreciation? Okay, so this is a question about depreciation and an S Corp approval date. So your S Corp is approved for next year, which means you don't need to start, the payroll planning for a business tax return until March of 2027, which feels crazy to say. So let's assume you bought assets for this particular year where you're still treated as either a sole proprietor or a single member LLC. When you file on Schedule C, you can still claim, regular deductions. Being an S Corp doesn't unlock the ability to do, accelerated depreciation. So as a Schedule C filer, you can still use bonus depreciation on anything you bought this year while you're still being taxed on Schedule C. The questions keep coming. We've answered a handful and they're still at the same number. So again, thank you for the participation. We'll find a way to get you the answers for anything we don't do live. We're going to do a couple more. This will be posted on YouTube and we'll keep going for a couple more minutes. Steve's asking, if you filed as an LLC and need to amend it, what form do you use? I may need more context, but if you mean you're an LLC and you want to be taxed as an S Corp, you actually exist as both at the same time. So there's no need to amend like in articles of organization for an LLC. Your LLC exists and then the S Corp election is layered on top of it. So if that's what you're referring to, Steve, you can add the S Corp election on top. Andrew's asking, is the S Corp always filed between January and March? If my LLC is registered in a prior year, then would I need to file for late relief? Yes. So it depends on when you want your effective date to be. If your LLC was formed sometime in 2024 and you want the effective date to be January 1st of 2025, a timely S Corp election would have been due by March 15th, 2025. So at this point in the year, you would follow the late relief process. Austin's asking a great question. If I'm already using Gusto, how does that work if I join Collective? So your Gusto account, assuming it's the same entity, so it's the same LLC or S Corp, um, that tax ID is tied to your employer registration that already exists in your Gusto account. So we would essentially coordinate a takeover to where your Gusto fee is paid via Collective instead of paid separately. But it would be a continuation of that same Gusto account because it's tied to that EIN and that related employer registration. Can you make a change to an S Corp effective 1/1/2026, or do you have to go back to when you first started? So this question may be related to an S Corp election. I'm not sure that I understand this question, so I'm going to skip it for now. Anonymous attendee, if you asked a question about an S Corp effective date in 2026, um, if you have time, feel free to maybe rephrase that in the Q&A and hopefully we can get you an answer. Jimmy's asking, is it easy to get an S Corp election if you have an inactive LLC? Your LLC needs to be in active status. So if it's, inactive or voluntarily dissolved, you may need to do some work with your Secretary of State to get it up to back in compliance. But an existing LLC, assuming the owners are eligible owners, may be able to follow late relief. There are 47 more questions and we're 12 minutes over and 80 of us still on the call. Thank you all for joining. Thank you for hanging on. And again, thank you for the participation. We're going to call it here. We're going to do our best to review the rest of your questions and get some answers. Thank you for joining. If this is your first time, the recording will be sent out. We also post these to YouTube. Find me on LinkedIn, follow us on socials to see recordings, and we'll see you next time. Bye.